On Thursday, Tesla announced that they delivered 11,507 vehicles in the second quarter of 2015, which was well ahead of their guidance given after the first quarter earnings of 10,000 to 11,000 vehicles. After that news, shares went up 4% to $280 per share from $269. In this video, we're going to investigate whether or not that share price move makes sense, and to do that, we're going to use our earnings model. If you're new to our earnings and valuation approach, we use 50% weight to the price-earnings ratio and a 50% weight to the discounted cash flow. We model the full financial statement, so income statement, balance sheet, and cash flow statement. And down at the bottom section, you can see we have our two valuation approaches. So here's our multiple approach, and here's our discounted cash flow. In between, we have segment details, which are driving the earnings in the income statement up above. We have it color-coded so you can see where we're making assumptions. Anywhere you see orange cells, those represent consensus estimates among analysts. Anywhere you see purple cells, those represent the guidance from the company, and then the blue cells represent our estimates. But we're only making these estimates to get back to the consensus details, so feel free to download this model from our website, gutenbergequityresearch.com, and plug in your own estimates there. Okay, so before we get started, this was last updated after the first quarter earnings release, and you can see that we have this $255 target, but the day before the press release, shares were actually trading at 269 times. So let's just recalibrate our model so we can get to the change that's just related to the new information. So to do that, I'm just going to simply reset the market multiple to get us to a $269 target. Okay. Now, all we need to do is update the number of deliveries. We're assuming that they're all Model S deliveries at this point. So we'll just put in 11,507 deliveries for the second quarter. And you can see all the earnings recalculated. The growth rate stayed the same. So now, rather than delivering 55,000 vehicles in 2015, which was the guidance after the first quarter, we now estimate deliveries of almost 57,000 vehicles for 2015. And then if we scroll up, you can see these no longer represent consensus earnings estimates because all these earnings figures have updated. And the new share valuation is $273 instead of $269. So directionally, the move makes sense, but the $280 mark might be a little high, and really to get to it, we are trading at a very high multiple relative to where they've been over the last 2 months. So it might be a little bit aggressive. Of course, in the next earnings call, if they change their delivery guidance for the full year, which is very possible based on the strength that they had in the second quarter, then that multiple may prove a little bit low, and the $280 mark might be a little conservative. On the flip side, there's still weakness out of the Eurozone, which will impact their gross margin on Model S deliveries. So we might hear some conservative remarks from them on that. But there's always the Tesla Energy segment, which really hasn't ramped in most analysts' earnings models, so that could provide some upside as well. Be sure to check back after earnings to get the full updates on the new valuation.